3 companies now carry more weight in emerging markets than the countries of India, Brazil, South Africa, and Mexico combined. Those companies happen to be semiconductor giants in the countries Taiwan and Korea. So what's driving this incredible rally? And the question that we all want to know, is it sustainable? We're going to talk about that and a whole lot more right now on UBS Trending. Hi, everybody, and thank you for joining me. I'm Anthony Pastore, your host for UBS Trending. And in the studio with me again is Alejo Cherwanko, the CIO for Emerging Markets Americas here at UBS. Alejo, good to have you back.
Thank you for having me.
Despite World Cup fever, which we're all talking about a lot, the final games are coming up soon, we have to go to the emerging markets landscape now because in prepping for today, you're talking about Taiwan and Korea, and there have been incredible gains in their equity markets. And I mentioned in the beginning, more than 3 companies are besting multiple countries.
That's right.
What's going on there? Why are we seeing such incredible outperformance specifically in these 2 countries?
All right, let me take a step back. Emerging markets at large have been outperforming the S&P 500 for 18 months now. Yes, this year, it's been mostly about Korea and Taiwan. These countries are up 80% in US dollars, 60% in US dollars, respectively. Tremendous rally. But if you incorporate support from Latin America in the last 18 months, you also see very significant returns, 75% up. So I think the emerging markets are a story of technology, mostly North Asia, and commodities, mostly Latin America. Specifically to Korea and Taiwan, you are referring to countries that have been focusing on building the best chips in the planet for 50 years. It takes a lot of work. You got to develop an ecosystem of suppliers, the know-how that today, quite frankly, it is irreplaceable.
Yeah. When you look at Latin America, before we go back to Taiwan and Korea, what are some of the countries that are performing well?
It's been broad-based,
Yeah.
really. Brazil, in the last 18 months, solid performance. Mexico accompanying, Chile, Colombia, Peru, Argentina, all of them well into the double-digit territory. So it's been broad-based, taking into account depressed valuations in Latin America and a fair amount of commodity exposure.
Right, exactly. Let's go back to Asia then, because it looks like Taiwan and Korea have actually overtaken China as the largest equity markets in the emerging world, which is almost unfathomable to think about, because we know in China there are more billionaires per capita than anywhere in the world, or certainly rivaling the U.S. and other developed economies. What does that part of the story tell us about how investors think about the future of growth, especially in that region? And I know we're talking about semiconductors and, of course, the increased usage and implementation of AI kind of helping to tell the story and making the story really feasible for these countries.
You're spot on. Maybe to put things into context, today, Korea and Taiwan together make up almost 50% of emerging market capitalization. Gigantic.
That's incredible.
Right? Overtaking both of them, each of them, China. And as you highlighted in the intro, I think even more mind-boggling is the fact that 3 chip companies from Korea and Taiwan today have a larger weight in emerging markets than India, Mexico, Brazil, South Africa, the UAE, and Saudi Arabia combined. Right?
That's wild.
This is how much concentration we're talking about these days. In addition, volatility has picked up. Focusing on Korea, there's been quite some use of levered ETFs by retail investors to express investment views. And this, of course, turbocharges the upside and potentially also the downside. So volatility in Korea, to some extent Taiwan, has extended to the broader emerging market. So I would say, Anthony, the emerging market ecosystem is evolving. You got to be mindful of concentration and in some way, just remember Warren Buffett's mantra: be greedy when others are fearful, be fearful when others are greedy. This is not necessarily the time to aggressively chase the leaders. It is time to maintain exposure, but diversify across other countries.
Okay, but I have to ask this question. I'd be remiss if I didn't. So looking at the numbers again, Taiwan's equity market's up about 60%, Korea
Yes.
maybe more than 75%. Just for context, if you look at the average gains in the S&P 500 here in the US for the last 50 to 60 years, it's about 8 to 10% a year on average.
Yes.
Right? So comparing that to these numbers, it's a massive difference. So 60 and 75%, for those that may not know, those are big, huge gains.
I think everybody understands that.
I think they can, right. Contextually, it's even more significant, right? But here's the question then. Are we in danger of some kind of bubble territory? Are valuations correct as far as you can see when you're looking at, everything from the beginning to the end? And also, are investors maybe in danger of getting ahead of themselves given even the volatility that you were just talking about?
Yes, let's maybe get some facts straight, because a lot of the rally can be justified by fundamentals. These companies are posting incredibly strong earnings.
Right.
So when you look at the price divided by the earnings, things are not crazy, right? There's been significant moves. Yes, I think you could argue maybe markets are running a little bit too far too fast. Let me go back to Warren Buffett's, be fearful when others are greedy. I sympathize with that. But there is fundamental value behind what's going on in North Asia. Incredibly innovative markets. It takes 50 years to build something like this. And the harsh reality, Anthony, is there's no alternative. You cannot replicate 5 decades of deep, focused work to be at the cutting edge of semiconductor manufacturing in Korea and Taiwan.
Right.
So I think you should be able to hold two maybe conflicting thoughts in the head at the same time. Incredible markets, very solid fundamentals, maybe a bit running ahead of themselves. So what do? You maintain some exposure, yet you diversify, minimizing FOMO, minimizing chasing performance.
Right. What I appreciate you saying is that you're looking at the fundamentals and they are clearly there. We're not talking about meme stocks.
It's not all fluff. Yes.
Right. And it's not just technicals either, which technicals have a place in any portfolio, but you need the fundamentals as a baseline to make sure that you're actually investing in something real that has a store of value.
That's correct. There's still solid fundamentals.
That's right. Okay. So given all that, which by the way, thank you for confirming that, what should investors do? So obviously we talk every month here about how investors should diversify portfolios, putting some emerging markets in there. Given what we are seeing, particularly with Taiwan and Korea, and even what you mentioned about some of the things that are happening in Latin America, where should investors be adding exposure to their portfolios if they don't already have it?
Yes, I would say look at our transformational innovation opportunities. That's a good way to play many of the dynamics behind Korea and Taiwan. If you believe in AI, as we do, you should build a portfolio that is dynamic, that adapts to the opportunities at different points in time, and that has a strong footing in the U.S., but also contemplates opportunities outside of the U.S. That's what we're doing with our trios: artificial intelligence, power and resources, and longevity.
Yeah.
Right? You will get some North Asia exposure through this transformational innovation opportunities approach. In addition, we think emerging markets can continue to perform. Earnings are there, valuations are not demanding, and you should have, of course, Korea and Taiwan, but contemplate Latin America, as we emphasized before, and some of the laggards from 2026. India is down 10% this year in US dollars. China is down 10% this year in US dollars. Clearly not doing very well. We think there's some value brewing in the laggards as well.
Okay. Alejo, thank you. You know, it's funny because just a few years ago, before AI was in the conversation and a real part of our daily lives, there was talk that cell phones, which was a bigger part of the semiconductor business for the decade before, had maybe started to reach a bit of a peak. And there was concern about what would happen with the semiconductor industry. But then AI comes into play, and now we're seeing stories like this.
We can't get enough of them.
Exactly. Yeah, they just can't get them out fast enough. Alejo, thank you so much.
Anytime.
Good stuff. Great story. Thanks for sharing it with us.
Thank you.
Great. Good to see you. And thank you all for joining us. There's a lot more information on our website, which is our Insights website, ubs.com/views. Great content coming out of our Chief Investment Office. Plus, you can follow UBS on social media. We're on LinkedIn and Facebook. Plus, you can follow us on Instagram. The studio has its own dedicated channel there. Follow us at UBS Trending. Lots of content there for you. And as always, if you have any questions about what Alejo and I spoke about today, please make sure you are continuing this conversation with your financial advisor. Until next time, I'm Anthony Pastore. We wish you a great rest of your day. And remember to keep your eyes on what's trending. We'll see you soon.